Hey, Scott. Yeah, this is from the FHFA director, Bill Pulte. He is the conservator of Fannie Mae and Freddie Mac. He just posted on X, after significant studying and in keeping with President Trump's vision to make the United States the crypto capital of the world, today I ordered the great Fannie Mae and Freddie Mac to prepare their businesses to count cryptocurrency as an asset for a mortgage. Interesting, in the note, he then has a release from the FHFA, whereas cryptocurrency is an emerging asset class that may offer an opportunity to build wealth outside of the stock market and bond markets. Cryptocurrency has not typically been considered in the mortgage risk assessment process for the mortgage from mortgage loans delivered to the enterprises without converting that cryptocurrency into dollars.
Something very strange happened with a post that the president made about cryptocurrency. That's like, if this happens, what else are you going to say? This could be exponentially explosive. Because when we go to the past and we're like, well, remember when we were skeptics about Bitcoin?
It's ridiculous.
Basically virtual currency, the same that you would get for blasting aliens in a video game.
Well, you know, Hal Finney and all this stuff, cryptocurrency, and then you're like, Julian Assange in 2011, 2012 accepts donations in Bitcoin. What? Why would he accept Bitcoin? He does. Winklevoss twins, they like Bitcoin. Yeah, those are the Facebook guys, right? Yeah. Richard Branson likes Bitcoin. Richard Branson, Elon Musk in 2014, first time he tweeted about it. Then in 2020, 2021, he bought $1.5 billion of Bitcoin with Tesla. Bill Gates initially said good things. Now he's critical about it. Then you think about institutions when they came in. 2020, MicroStrategy buys $250 million of Bitcoin. What? Why would he buy so much Bitcoin? Then Morgan Stanley, then others started getting involved. Then BlackRock starts a Bitcoin ETF, 150,000 Bitcoins they buy. Dude, if all of these guys are now looking at this, maybe I ought to consider a little bit of my portfolio being tied to cryptocurrency. And then the president puts this on Truth Social. You ready? President Trump on Sunday announces that he wants to establish a crypto strategic reserve for the US government, kind of like Fort Knox with gold. We're talking crypto. That will include things like Bitcoin, Ethereum, XRP Ripple, Solana, and Cardano. Whoa, the government wants to have a strategic reserve of cryptocurrency? They do. What's left after that? Is this a way of saying confirmation at the highest level that you ought to maybe consider getting into it? Maybe.
10 years time, you've got $1.8 million sitting in Bitcoin. You can now borrow up to 50% of the value of that Bitcoin. So you could borrow out $900,000 from the financial institution. And here's the benefit with doing that. One is you're not selling the Bitcoin. So you're still going to keep exposure to the market because it could still go up. And as you can see over that up to 20 years, it's going to go up to $32 million. So why would you want to sell the 1.8 million and miss out on the potential gains? So you keep the Bitcoin, and by keeping the Bitcoin, you now don't have to pay any capital gains tax. And by borrowing the $900,000 or up to $900,000 on that Bitcoin, that is a loan. So that is now not treated as income. So again, is not a taxable event. So you're going to get the full $900,000. 10 years time.
Yeah, man, that's crazy. 40 days, God, I've been Swayze. Blew the bid out, that ain't shady. That's a bird, man, I ain't baby. Talking hope out, that's so crazy. How I got a shot, raise the bean sprout up, put a crown up on her head so the boys seeing, no, that's a lady. If you ain't catch a double that time on the last rhyme, dog, I could help you. I got plenty more where that came from. When I brainstorm, I need shelter. It's enough water from the most high.
What's good, baby? It's your boy Dale. I'm back in the saddle again. Our motto is to buy, build. We already bought it already, so we already own it, free and clear. Refinance to long-term debt, cash flow. That is the motto. Cliff, man, is that a pretty strong motto, man? What do you think?
Man, the model is strong. Like, you're getting each piece of the invest, right?
What up, what up, what up? It's your partners Dale and Cliff back in the saddle again for another edition of Real Estate Friday Live. Man, Cliff, how you doing, big time? What's going on with you, baby?
Man, doing good, man.
Yes, it's been a very eventful week. I ain't gonna lie to you, it's been a little bit of a tough week for your partner, but we still got to the bag, man. Did we get to the bag, big dog?
Oh yeah, man, we got the bag,
Yeah, so you gotta get it, man. Guys, if you do us a favor real fast, guys, if you could like, share, and subscribe, guys. If you're on the platform where there's a little bell there, do us a favor, guys, click on that bell. So when Cliff and I come live, you can come kick it with your partners, Cliff, man. Real quickly, Cliff, man. I know you've been out of the taking care of family business, man. Real quick, guys, we go through the current market analysis. Cliff, we have a licensed appraiser on the screen, guys. Licensed, and he knows residential and commercial. Cliff, what are you seeing in the market? What's going on big time?
Yeah, man. So the market is still going sideways a little bit. Haven't seen a big push from buyers coming in the market, so it's still going sideways for the most part. Higher end properties are starting to stagnate a little bit.
Really?
Yeah, they're sitting on the market a little bit longer than normal. Days on market are still kind of, they're usually in Dallas and the DFW area hit around 60.
Yeah.
45, something like that. They're starting to go up a little bit.
Okay.
But still, I still think that if you're under 600, 550, you're in a good area.
Okay.
But I'm seeing the price per square foot drop right now.
Ooh.
So, and I'm starting to see the inventory rise. I still think in the next 6 months is probably going to be, I think we're at the bottom. I think we've been at the bottom for probably the past 3 months or so.
Okay.
And we'll be there for another 3 to 6 months before we start seeing it tick back up.
Now, what do you think is going to cause it to tick back up?
Lowering of interest rates.
So what you're saying is these, because we already had the Federal Reserve cut it a quarter of a percentage, which was nothing happened at all. How many cuts do you see coming in the next 3 to 6 months?
3 to 6 months, probably at least 1, maybe 2. But overall, what the trajectory that I see is Trump is whoever he puts into the Fed is going to cut.
Yeah.
Period. They're not going to get in there and do nothing. They'd rather be too low than too high. It's going to be the opposite of what we have now, where they may feel being a point or point and a half too high is fine. I think Trump's new person is going to be the opposite. They don't mind being a point or point and a half too low.
Gotcha. But his person didn't get in until May 2026. So it's still a little bit of a time frame. And I believe there's an appointing standpoint. Now my question is, when it comes to the Fed chairman, does he have to be voted on in the Senate at all, or is he just appointed by the president and he just walks in?
He's appointed.
Okay, so therefore there's no need for Senate confirmation, correct?
None. Yeah.
Gotcha. So that could be a quick appointment, and I believe right now they are already interviewing for a new Fed chairman. Guys, it's gonna be very easy. It's gonna be very interesting to see what's going to happen about this man. But I agree with Cliff. There's gonna be very little movement on the retail real estate at all. Now, commercial is getting destroyed right now. I can't tell you the commercials getting destroyed. But residential wise, the only movement I see a little bit is on the home building side, but it's because the home builders have their own paper. So they can actually offer a lower rate and give incentives and ways for you to buy down that rate to where you may get quoted with their paper, maybe a 5.5%, 6% interest rate, but they can give you incentives, but also they can also give you buy downs as well also. So you can go from a 5.5% down to a 4%. They are that aggressive on a new construction. Because if you see the same thing?
Yeah. Oh yeah. New construction. So what they do is because they have their own bank, their sister company. But what they're really doing is that bank just has to break even. They're not actually trying to make money from their mortgage company. So they eat the costs and use all that additional profit that they normally make to buy it down on their end.
Correct. To
bring down that rate, and then to even try to do more incentives as they can on some other things that they can do about maybe closing costs and some other stuff. So it's a different, versus a typical mortgage company that's trying to make 2 to 3%. They can now use that to buy down and do some different things.
Yep, they're doing that, man, but they're very, very aggressive. I know Lennar is aggressive right now. Who else is aggressive right now? Grand Homes is aggressive. J. Anthony is aggressive. Shattuck Homes is aggressive. But I'm seeing the most aggressive movement with Grand Homes and Lennar. Those are two most aggressive ones that I see. But there may be some. Now, there's smaller builders. They don't really have the movement to do a lot of things, even though they could probably negotiate something. I don't seem to see that at all, what's going on. But that's what I'm seeing, Cliff. That new construction industry they're very aggressive right now. Really aggressive.
Yeah. Yeah,
Very aggressive.
and they're buying on the outskirts. So the lots are smaller than normal. So they're still doing all right because they playing by different rules.
That is correct, man. But man, guys, it's something that's our current market analysis, guys. We get it in real quickly. Now we have a topic to talk about real fast, guys. Last week I talked about this, but before I do that, guys, Cliff is not only is Cliff a licensed appraiser, an investor. Cliff, do you love crypto?
Man, crypto is booming.
He loves crypto. So, guys, you got my sentiment last week on this. So, if you want to hear what that is, go watch last week's on this topic. This is part two. Part two. Today, guys, we're going to re-talk about a $37 trillion crypto debt reset and how money is going to be created with this new system, and how the Federal Reserve, really the Trump administration, they use the crypto as an asset for you to qualify for a mortgage, and how there's an open opportunities for investors. So, Cliff, man, let's dive into this first topic really quickly, man. Let me get to it real fast. Where did it go? This here, Cliff, kind of shocked me real fast on this. Let me get to the video real quickly. I thought I had it up, but I did not. No, here we go. This right here kind of shocked me, Cliff, and I want to get your opinion on this, guys, because Cliff, he's been really kind of what's what I'm looking for?
Just following the industry.
Humble. He knows a lot about crypto, guys. So again, this is a cryptocurrency reset for the federal debt. Now watch this, Cliff. Here we go.
Economic Forum.
What's going on? Hold on. Could you hear that at all, Cliff?
Yeah, I can hear it.
You can hear it? Okay, here we go.
Putin's closest advisors dropped a bombshell. He said that the U.S. is preparing to use crypto and stablecoins to secretly devalue its entire $37 trillion debt. Now, he claims America will put that debt into a crypto cloud they would then use to reset the system. So basically, leaving the rest of the world holding the bag. Now, this is Anton Kobiakov, right? We're talking about. He's a senior advisor to Vladimir Putin for over a decade. This isn't some random official. This is Putin's guy. And you know what? He's actually right, but it's just not in the way that you would think. You see, Russia thinks we're going to print digital dollars out of thin air. That's not actually how this works. But the devaluation part, the reset part, that's absolutely happening. Now, real quick, I'm Mark Moss. I've been tracking these monetary resets.
So, Cliff, beginning from there, because we both like Mark Moss, both like him. From there, what are you thinking about that so far?
It makes sense. Yeah, every country around the world is seeing what we're doing with crypto, and they're scared because they no longer have control of their currency. The U.S. will take over the entire world. It already is the de facto one, but it's going to dominate in a way that it hasn't before.
Now, here's my question real fast before we dive back into Mark Moss. How will it dominate?
Simply put, right? Let's say, let's name a couple different countries, right? So most of the countries that are hard, think of hard to bank countries. You're in Nicaragua, right?
Yep.
You live in Nicaragua, hard to bank. Let's say Brazil, millions of people out in Brazil, right?
Yeah.
Another country that's hard to bank. And I'm talking about U.S.
Yeah.
Hard to get a U.S. account.
Yeah.
You can go to Africa and go to Niger. You can go to let's see, Egypt, right? Kenya, hard to bank,
Yes.
right? You can go out to Asia to the Philippines. Anyway, do you think if you're living in one of those countries, if you're living in Brazil, you're living in Nigeria, you're living in the Philippines, do you want the U.S. dollar, or do you want your country's currency?
The U.S. dollar.
Exactly. It's stable. You can count on it, unlike their currencies. Today, the only way to get that is either have hard cash, and now every time they get paid in their currency, they have to go to the exchange and pull out cash, and then they have to hold the cash on them. Everybody knows you don't really want to hold all your money in cash on you. So what's their option? Because they can't get a U.S. bank account, right? They have to go through all these convoluted systems. In the future, there will be a internet bank that they can go to called crypto, and they will be able to take all their money and convert it instantly via an online portal to U.S. dollars.
Yeah.
and they will all be able just to hold their currency in a U.S. Currency.
Correct.
That's going to put more lending on that currency, which is going to put more demand on that currency. And the U.S. is not, and everybody around the world. What percentage do you think the population is going to switch from their current currency in their native country to the U.S. dollar?
Probably 100%.
Why would you have any? Their currencies will go up 15-20% in a year.
Quick, guys. Guys, to me is life, and that they're not going to print more coins. They're going to leverage the existing coins. They're going to leverage it. So this is not a play on new coins being created. Oh no, this is the reason for the Genius Act, right? So real quickly before we go to the second thing, I want to bring back in Mark Moss real quickly. He's going to dive into the Genius Act real quick, and then we go to the next topic. Here we go.
Sets since the last one is way bigger than what Russia even understands. So let's break down what's really going on. You ready? Let's go. All right, so let's look at exactly what Russia is saying here. Back at the Eastern Economic Forum, again, Anton Kobyakov, and remember, this is Putin's senior economic advisor, right, for over a decade. Now, he's been in the room for every major Russian economic decision. He's laid out this theory. Again, he said the U.S. is trying to rewrite the rules of the gold and crypto markets. His exact words were that America's ultimate goal is to push the whole world into what he called the crypto cloud. Now, think about that phrase. Crypto cloud. He's saying once the world's money is digital, once it's in stable coins, once the U.S. moves its $37 trillion national debt into these digital assets, and then boom, devalues it, wipes the slate clean, while everyone else is holding the bag. But
stop right there, Cliff. That's exactly what you just said. Am I right?
Exactly.
So
yep.
They guys, the 37 trillion, really, guys, is over 100 trillion. Because Medicare, Medicaid, and Social Security is not involved in a $37 trillion debt at all. It's not. Period. All right. So again, it's $37. That $37 trillion. We use that number. Guys. Is they're just going to inflate the debt away. It's called modern monetary theory. That's all it's called. That's all it's called. Now, Cliff, let's go a little deeper. Let's bring in another female. She actually goes a little deeper into this thing, and she kind of sounds a lot like you on this, because she's saying, like, wait a minute, we have to, let's see, boom, here she is, and we'll make her a little bigger for me and Cliff here real fast, y'all. Here we go. Now, guys, this is another female. She's going a little bit deeper into what this is going to look like. This is after the Genius Act. Here we go. Let's dive in this real quick.
One thing that I find interesting is on the surface, it looks like it's about innovation and embracing crypto, but underneath, it's also about something very geopolitically strategic, and that is extending dollar dominance. We need buyers for U.S. government debt. So again, these stable coins will be backed by short-term U.S. treasuries. And if you look at the current stable coins out there, ones like Tether, they have been significant customers for the U.S. treasury market. And right now, we're in a bit of a predicament. I'm sure you've covered it on the show, $37 trillion worth of debt. And so I think it's really interesting timing that they prioritize this stablecoin bill, because we really need something to absorb the debt that we're going to need to continue to issue, because we're running such big deficits. And as Lynn Alden always says, nothing stops this train. So
I think part of what you're saying, Natalie, is that the world is becoming more digital. Everybody knows that, and that people do transact digitally now in many different ways, right? You pay with PayPal or Venmo. But if someone were to say, well, why would I ever need a stable coin? In other words, why can't I just transact with a credit card or using the sort of technologies that already exist? Why would I want to own a token somehow connected to a treasury? What does that actually do for me?
I think a lot of us take for granted what happens behind the scenes when we use electronic dollars with, say, our credit cards, for example. Settlement actually takes a long time. And with every credit card transaction, there are gatekeepers and people who take fees along the way. And this actually gets worse when you think about, on a global scale, transactions that are happening cross-border. So these payments are made instantly. They settle in the background instantly, and they expand access to the dollar in countries where they have far worse debasement and inflation than we do here in the US. But one reason why I think stablecoins will actually encourage Bitcoin adoption is because at the end of the day, what's wrong with fiat? The supply constantly expands, and that's true for our dollar as well as every currency out there. And so I think people will start to use stable coins as maybe a payment mechanism, but they will start to increasingly save in Bitcoin because it's the one thing that no government can print.
Cliff, bruh, did she kill it?
Yeah, yeah, she's killing it because I was actually just doing some research on it real quick because she's 100% right. Because everybody has a cell phone around the world, and now with everybody having crypto, it's easy to have it on there. So, for example, I work with different people around the world. I have a partner in Nigeria. I pay him Bitcoin. It's simple.
Yeah.
I buy Bitcoin on my account. Cool.
Yeah.
What's your address? He sends it to me. Bang, bang, gets his money
That fast.
that fast, and he could switch it. And there's all kind of free exchanges.
Yep.
We can hold your money and you can exchange it. Boom, USDC. Cool. Now you can hold your money in there. And that's what he does. He doesn't hold the Nigerian currency. When I send him the Bitcoin, he automatically turns it to the dollar and holds it.
Yeah.
That's it. And so what I'm looking at right now is basically what's the total. What I'm looking at basically is what's going to happen. As everything goes digital and more, you're going to see banks start getting crypto. It's easier for them to hold their accounts, be able to send it, everything. What is the entire market cap of all money? Think about it. What's the market cap of all money? Roughly 123 trillion. So what percentage of all money will be held in Bitcoin? Because even if that's held in USDC or the dollar, everybody's probably going to have a piece, let's say 5% in Bitcoin.
Correct.
Just because it's it's a offset of the dollar. Because if the dollar loses value, which we already know it will, Bitcoin is going to rise in comparison.
That is correct.
So based on my just kind of basic numbers here, you will see Bitcoin, right now it's at 122,000. You could see Bitcoin theoretically reaching its top around 9.6 million.
Okay.
A coin.
A coin.
A coin.
God. Whoa.
So roughly an 80x of what it is today. Who knows how long this trajectory is? This could be over 10 years. Long term, but you're most likely going to 80x your money over the period of time that we have going forward. So if you just throw in 10,000, let's say, times 80, it'll turn into $800,000 from 10,000 over the next 20 years, 10 years.
Wow. That's a lot.
Yeah. That's why they're in it. And that's why people who got in real early are killing it.
They're killing it.
I'm probably going to actually start trading it and buying dips and holding on a, quarterly basis and start doing that because I'm gonna hold long term. I buy periodically. I might throw it every couple months, buy a couple grand, something like that, and just keep buying it. This year I'm probably already up on my buying and selling and everything 15-20%.
Yeah, that actually makes some sense. But guys, he's spot on, guys. Now let's dive into this here, Cliff, real quickly. Next topic, real quickly. Cryptocurrency as an asset for mortgages, guys. For mortgages. Let's dive into this one real quickly, Cliff, because I think you're going to probably like this one real quickly. Let's dive in. Let me replace this one real fast. My bad, y'all. Replace. Here it is. Here we go. Let's dive into this real fast. This is CNBC. Here's an announcement.
We're back with some news on the housing front. We'll go to Washington. Diana Olick has that for us. Hey, Di.
Hey, Scott. Yeah, this is from the FHFA director, Bill Pulte. He is the conservator of Fannie Mae and Freddie Mac. He just posted on X, after significant studying and in keeping with President Trump's vision to make the United States the crypto capital of the world, today I ordered the great Fannie Mae and Freddie Mac to prepare their businesses to count cryptocurrency as an asset for a mortgage.
Wow.
Interesting, in the note, he then has a release from the FHFA, whereas cryptocurrency is an emerging asset class that may offer an opportunity to build wealth outside of the stock market and bond markets. Cryptocurrency has not typically been considered in the mortgage risk assessment process for the mortgage. from mortgage loans delivered to the enterprises without converting that cryptocurrency into dollars. So he is now, this is not happening immediately, but he is directing Fannie Mae and Freddie Mac to prepare proposals for consideration of crypto as an asset for reserves in their respective single-family mortgage loan risk assessments.
So again, guys, Cliff, on this one, my opinion on this one is this is an attempt to make the retail buyer, and I even say investors, bankable. Because if you can actually, more bankable, because if you can actually add an additional asset like crypto currency onto your balance sheet when you come to qualify for, when it comes, because you have your life insurance, your 401ks, your IRA, your Roth IRAs, your 403bs, you have all these other security instruments counted when you're actually applying for a mortgage, but they were negating cryptocurrency. Now, the Trump administration is saying we want to be able to count this other asset, cryptocurrency, into as an asset for the borrower to say, hey, I'm more bankable here because I have more cash to play with via cryptocurrency. Man, you agree or disagree?
It's another beast move. Because think of it now, because most people don't know this, but many large assets are owned by foreign nationals.
Correct.
Now, if they can put their money in crypto and use that as a backing of it, and what do you think they're going to own in crypto?
Yeah,
U.S. dollar. And then they're going to, so it's another genius move. I'm looking at Coinbase as we're talking. I'm like, I got to get it on C, because Coinbase is going to be a monster in the game. Matter of fact, I just got Coinbase today. Y'all don't know, it's a wallet to store them.
Correct.
And they're licensed. They're on the stock market, so they're probably the most reliable company right now. They're up 50% on the year in their stock.
Wow.
50%.
Wow.
I might still buy in because this could go to 3,000. This could 10x. I can see Coinbase as the market grow. Where is all the money going to be stored?
Correct.
Where are you going to put your money so that you feel like it's reliable? You want a bank.
Yeah.
The only reason why Coinbase will go down is if they start allowing banks, JP Morgan, Bank of America, jump in the mix.
Correct.
Then Coinbase becomes less of an asset.
Correct.
So the crazy thing is with Coinbase too, just to let you know, it's easier to get lending. So on Coinbase today, I literally just lent my money out. I'm getting 10% return on lending my money out a year. So more and more people are going to do that to lend their money to get huge returns on their assets. And I will say this, I just thought of this idea. And this is genius, I think, with crypto, what's going on. I'm surprised that more aren't taking mortgage notes, buying portfolios of them, and then turning those into individual crypto assets per mortgage loan that you could own the.
Can't hear you. Can't hear you at all. There you go. All right, go ahead.
Yeah, you could own the interest on that and make some good money.
Yeah, you could. You guys, you're spot on, guys. He's spot on, man. This is some big. That's for the retail buyer. Now let's go to the investor real quickly, because we got a hard stop at 5 p.m., guys. Hard stop. Here we go. Now for the investor. So what's the pivot move for the investor? I'm glad you actually asked that question, y'all. Here's the last video, guys. All right. This is for investors. All right. For investors. What happened to them? Okay, my bad. Let's go here. All right, here is for the investors, guys. Here we go. Let's dive into this real fast.
10 years time, you've got $1.8 million sitting in Bitcoin. You can now borrow up to 50% of the value of that Bitcoin. So you could borrow out $900,000 from the financial institution. And here's the benefit with doing that. One is you're not selling the Bitcoin, so you're still going to keep exposure to the market because it could still go up. And as you can see over that up to 20 years, it's going to go up to $32 million. So why would you want to sell the 1.8 million and miss out on the potential gains? So you keep the Bitcoin, and by keeping the Bitcoin, you now don't have to pay any capital gains tax. And by borrowing the $900,000 or up to $900,000 on that Bitcoin, that is a loan. So that is now not treated as income. So again, is not a taxable event. So you're going to get the full $900,000. 10 years time, you've got $1.8 million sitting.
So again, guys, this to me is a cryptocurrency play of a 1031 exchange. That's all it is. This is a de facto refinance, Bird method, using cryptocurrency. Why would you sell the cryptocurrency when you can just take a loan out on it?
Yeah, and I have to double check and see what that loan amount that you can get, because I think the interest is pretty low on the money you're borrowing.
50%.
Right, but you have to pay it. When you borrow, though, there's an
Of
interest
terms.
rate you have to pay.
Yeah,
right.
Yeah, you do. What the rate is, I don't know the rate off the top of my head. I don't know the rate. But guys, this is normal. There's several lenders out there right now that actually have they'll loan you out money on your cryptocurrency based on the value all day long. You have private equity companies actually using cryptocurrency as a way for them to leverage to make investments into companies. And they kind of line it. They'll begin with the loan from the cryptocurrency, put it into a compound interest environment, right? Borrow that out of there as well also, and then make that investment so that their money is making money. So basically, if they're getting charged 5% on the money on the loan initially, but they're making 10%, it's a wash. It's a wash for them. The money's making money for them as they're making investments. This is how they kind of insulate themselves from losses, so to speak, because typically when it comes to private equity companies, VCs, if they invest in 10 companies, they're banking that probably 2 are going to make it. The other 8 are going to fail.
Mm-hmm.
Simple. But yeah, Cliff, what do you thought about that when it comes to for real estate investors?
I mean, it's at some point it's going to, and I'll say this too, because I do gotta get off here pretty soon.
Mm-hmm.
I actually heard on a podcast the CEO of the NASDAQ.
Mm-hmm.
A couple huge things. One, they're going to actually start doing a couple of different things. One, they're going to open up a crypto side.
Yes.
The NASDAQ is going to have a crypto side. It's also going 24/7. So
Wow.
you'll be able to trade stocks 24/7. The whole world, everything's going to be financed.
Yes, it is.
Through the liquidity. That's why I'm getting into and even trying to liquidate even the real estate and assets.
Yeah.
The other thing that they're going to start doing too is private equity is going to actually jump on to the side of it. And I think Robinhood is doing this as well, where basically, let's say new startups, they will buy, they'll loan and get some money on that, right? The Robinhood will go ahead and buy and purchase, let's say 20% of a new startup, then turn around and issue shares that you can get in on those private equity opportunities, but you don't have to meet those qualifications.
Correct.
As a type of investor, because you're just buying it via a secondary account. Man, that's why I'm getting into more trading. I'm getting into more buying in liquid opportunities, because I think that's the way to go, man. But I got to get out of here in about a minute or so.
Oh, no problem. Real fast, guys, man. Again, we're ending the show real quickly, guys. But hey, guys, Hunter Appraisals. Cliff, tell them about what Hunter Appraisals is about real fast.
Hunter Appraisal Services. Basically, we do consulting. We do appraising in the DFW area and actually all of Texas. We're trying to expand as we start doing more commercial. We do consulting for investors, people who are in tough situations. We've actually helped them out with that. So just hit us up if you have any questions, and we'll be able to guide you through your situation.
Sounds good, guys. Guys, man, Cliff has to run real fast, guys. Hey, Cliff, man, good to see you, big dog. See you next week, big dog. Got you, guys. I guess also, guys, real quickly here, guys. Before I end the show, real quick, thank you guys for your time, guys. Also, again, we are giving away a free ebook, guys. Every single show we talk about this, guys. It's called Distressed Property Investing. We tell everybody when it comes to buying real estate, you make money when you buy, not when you sell. The art of making money when you buy is knowing how to locate distressed properties in your city, county, or state, guys. Really, your city or county, guys, right? We're giving away a free ebook. It is free. Don't want no money from you at all. No, nothing at all, period, guys. It's free, but all you got to do is do a couple of things. You can scan the QR code here on the screen. Number 2, if you can either DM us the word real estate, DM me the word real estate, is right there on the screen, or in the show notes below, click on that link right there, guys. What happens is you better go to it, and it's free. Don't want nothing from you at all. We want to get you the information. That's it. And then lastly, guys, we've been asked a lot to do this as well. Let me go here real quickly here. What did I go to? Here we go. For the Cash Flow Club community, guys, in the next couple of months, we're going to relaunch this as an inner circle community, guys. Our goal is if we can teach you how to locate distressed properties, guys, hey, we can even partner up with you if it makes some sense to even buy real estate at all. But our whole thing is to point you in the right direction, whether it be through us or not. This is going to be an inner circle. You'll be able to talk to CPAs, accountants, attorneys, things of that nature that can assist you in your real estate investing arena. Our whole thing is to give you access to a community. We actually have someone that we are partner with that can actually teach you how to structure your company. We make no money on the deal, nothing. This is just information that we give to you. And he's one of the best I've ever seen at teaching you how to structure your company the right way. And guys, I'm gonna let you know, he is a stickler for the LLC, right? Stickler for it. He's not really a big fan of it. But I digress, guys. But anyways, guys, this is going to be something that we're going to be putting together. It's called the Cash Flow Club Real Estate Community. It's just for you to be able to talk with other investors, but also get the wisdom that you need and why it's that you need to be able to become more successful in real estate. It's real simple, guys. All right, guys. Well, guys, thank you so much for your time, guys. I thank you so much for your time. I hit it every single time before you leave while you can. But if you see that thing, but take the picture for your mom and them. How's buddy? God bless you guys. See you next week, guys. All right, y'all. Peace.
Okay, so you did fixes and flips first, or were they? Now it sounds like you're more buy and hold. Okay, so you're wholesaling first. Okay,
because I was broke. I had no credit. I had no money. So I had to get some money coming in. So I learned how to do wholesale.
And you were doing wholesaling at the good time too.
2000.
When it wasn't so saturated. There was.
I kind of saw the debacle coming. Okay, it didn't make any sense. I was like, wait a minute, how can you lend out to retail buyers 99.7%?
Yeah,
just a little bit of a down tick. It's insolvent.
And you got to remember, in some states, because I lived in Florida at the time, you could have loan to value above 100% of your property.
Right.
The first property that I bought, it was 110%. We left the bank with like $30,000.
Yes. Yeah. Yes.
It was amazing to me. I was like, why am I not doing this all the time? But then clearly 0809 let me know why people shouldn't have been doing that all the time.
0809, that's why I made that lion's share of my money.
Wow. Okay.
Actually running from the cows, I was running to it.
Of course.
Because I saw it was coming.
Okay.
A lot of my business colleagues back then were buying flippers.
Yeah.
I didn't think it was wise for me to share 50% of my profit with Uncle Sam. He didn't do no work.
Okay.
So why would I give him free money?
Of course.
Okay, how can I make sure I'm still legal, but keep the lion's share of the cash flow?
Of course.
So I began studying the tax code with my accountants and CPAs, and I said, okay, I'm going to buy and hold a lot of properties. Now watch this. I actually buy a lot of properties. I take home money when I actually acquire it. Every single time.
Okay, you need to break that down just a little bit.
If you wanted to know how successful real estate investors make money when they acquire real estate and not when they sell it, click on the link below or swipe up and download our free ebook, Distressed Property Investing. The blueprint is in the ebook. Stay blessed, holla at your partner, and download the ebook today.
Bless God, give thanks. Bless God, give